Good day, ladies and gentlemen. So if you do not have a strategy that you can use to trade, or you don't trust your model, or you're looking out to try out a different model, this video is for you, because I'll be giving you a very solid trading system that you can use to trade. Okay, this system is supposed to be premium, but I just decided to give it to you for free. All right, so basically all you just need to know is that when you get a strategy, no strategy is set in stone. You, as a smart trader, you need to go and do your back testing. While you are doing your back testing with that strategy, you can tweak some areas of the strategy to suit what you are seeing on the charts. Okay, you can tweak it, all right, to suit your own personality, your own kind of a trader. You can tweak a strategy. Don't think you can just don't think a strategy is 100% perfect to the point that it can be tweaked by a smart trader. As a smart trader, you can tweak a strategy to suit you. Okay, so long that your tweaking improves the results that strategy can get, you are good. It is a good thing that you are doing. All right, a lot of persons that all these what's it called, ICT trading systems, etc., they are simply improvements of the old trading systems. People looked at the former trading systems, former strategies, and found areas where they could tweak and improve on that strategy. That's why you are having all these new trading systems coming up. Okay, it's not really new, it's simply an improvement on what is already on ground. So don't see yourself as someone that cannot tweak a strategy to suit what you are seeing on the chart. You are a smart trader, you already understand the basics of trading, so you should be able to tweak a strategy to suit what you are seeing on the chart, so long it improves the results. Okay, so what I'll be giving you here is very solid. It's liquidity based. It's supposed to be a premium, but I just decided to just give you this bonus. But definitely you need to go and work on it. Go and check your chart and see how you can improve on it. Okay, so basically how this works is what you really need for this is you need to understand relative highs and lows. You need to understand what we mean by relative highs and lows. The short way, the easiest way to find relative highs and relative lows is looking out for M shapes on the charts. When you have something that looks like M, then you have a relative equal high. Okay, and when you have something that looks like a W shape, you have relative equal lows, something like this. Then down here you have relative equal lows. Okay, sometimes it could even be more than two. You could have something like this, like that, like this. So these highs are relatively equal, and as you already know, above relative equal highs and below relative equal lows, you have what we call liquidity. Because people that want to take a sell trade from here to move downwards, they will place their SL above. So definitely there will be liquidity resting above relative equal highs. You also have liquidity resting below relative equal lows. The way I'm going to teach you this will be a little bit different from the way you've seen it on the internet. You already know I drop unique stuff when I'm really ready to drop something important for you guys to learn from. Okay, so if you're a new viewer, subscribe to the channel so you don't miss out when I drop these kind of details. Okay, so basically once you are able to spot a relative equal high, then you have done the very first step of the strategy. You can mark it out with something like this. Okay, I did this horizontal line here with a trend line. Let me show you where it is. So this is what I used. Look at it. I use this a lot when I'm charting, when I'm doing my charting. Okay, so that's a trend line. I can use it for slants stuff like this. Okay, and I can also draw it in a way that it will be horizontal. Okay, like this. So that's what I use. So you have to mark out the relative equal highs. You can see that's like an M shape. Okay, so this one is not looking really like an M shape, but because I have experience, I know that that's a relative equal high up there. Okay, so this is what I mean. It moved up, came down like this, moved up again, and then came down like this. Okay, so you can see that the high is relatively equal. Okay, relatively in the sense that it's not exactly equal, but it is almost equal. So what you do for me is you get an horizontal line and place it at the highest point of the relative equal high. Highest points. Place an horizontal line at the highest points of your relative equal high, which is what I have just done with that blue line. Okay, so once you do that, next thing you need to know is if your setup is around a relative equal high, know that you are looking for a sell trade. What you are looking for is a sell trade. If your setup is around relative equal low, know that what you are looking for is a what? Buy trade. So relative equal high is for sell trade, relative equal low is for buy trade. So right now my setup, everything I'm doing now is around a relative equal high. So you are dealing with a sell trade. Okay, I'm hunting a sell trade like that. I've placed an horizontal line at the highest point. So the next thing is we wait for price to get to that level again. So when price gets to the level, what you want to see ideally is for a candle to close beyond that level. So a candle closing beyond that level is more like it's grabbing the liquidity. Okay, it's grabbing the liquidity above that level. So you need a candle to close above the level, and then you need another candle to close below the level. Okay, so let's see what played out here. We have this blue candle right here closing above our level, right? And then we have this bearish candle closing below our level. Are we going to take a sell trade instantly? Hell no, we are not taking a sell trade instantly. There is a special candle pattern you need to see. If you don't see it, you don't have a setup. Okay, so what's the special candle pattern that you need to see? Since you are looking for a sell trade, you need a bearish candle to close below the low of a candle before it. I'll take that again. You need a bearish candle to close below the low of the candle before it. Now look at this. This bearish candle closed under our level, right? But it did not close below the low of this candle right here. Okay, so we have to keep waiting until we have an arrangement whereby we have a bearish candle closing below the low of the candle before it, and we have that situation right here. Okay, you can see this big bearish candle. It's closed below the low of the bearish candle before it. Do you see that? So we want to see a bearish candle close below the low of the candle before it. Now that candle that is before it becomes your entry zone, which is this bearish candle. So you can use two horizontal lines to mark the high and low of that candle. That candle becomes your what? Your entry zone. I need two horizontal lines. I want to mark out the boundary of that candle. Something else you can do, I'm using a 5 minutes time frame. Something else you can do, you can use the body. But if you use the body, it's going to give you better risk to reward ratio. Okay, so instead of putting your horizontal line right here, you can just adjust towards the body of that candle, because most times price will come back to the body area of the candle. Okay, but if you take your entry from here, your risk to reward will be kind of small. Okay, but it will still be okay for you to do so. But imagine moving this level to the body of the candle. So when price comes back there, that's where you're taking your sell trade from. It will give you a bigger risk to reward because you have reduced the zone. Okay, it's more like you have refined the zone to be smaller. Okay, but the only downside to that, to doing it like that, from my experience, the only downside is that sometimes price will not get to the body. Okay, so price will just come around where this wick is and then start pushing in the downwards direction. So you're gonna miss out on that trade. Okay, which is fine. So the ball is now in your court to decide what you want to do, whether you want to go with the full zone or whether you want to reduce the zone by moving your entry to the body of the candle. Okay, so let's see what played out. So price returned to the level, price returned to our zone, of which you'll be taking your sell trade. You can take your sell trade once price gets into the zone. Okay, take your sell trade from there. Stop loss is going to be a few pips above your zone, and then you can see what happened. Price pushed in the downwards direction. Very smooth and easy. Okay, do your back tests, do your own research based on the explanation I'm giving you and see how the result is. Okay, so I marked out another relative equal lows. The explanation I just gave was for relative equal high, which is this one right here. okay, which is this one right here. So I marked out another example for you. Relative equal lows. You can see this one looking like a W right here. This relative equal low, right? What's the next thing I need you to do after you have identified your relative equal low? Get an horizontal line and place it at the lowest point of that relative equal low, which is somewhere here. Let me delete this one so it doesn't confuse us. So remember, I need a candle to close below this level and then above the level before I start looking for my buy trade. Okay, so what played out, this bearish candle closed below our level. We don't have a setup yet. We need a candle to close above the level, of which we will now start looking for that special candle pattern, whereby we need a bullish candle to close above the candle before it. Then the candle before it will now become our entry zone. Okay, so let's see what played out right here. What do we have right here? Okay, this bullish candle closed, back into it closed back above our level, so that condition is fulfilled. Okay, we need a bearish candle to close below the level and then another candle to close above the level. This is fulfilled. Now the next criteria that needs to be fulfilled is we need a bullish candle to close above the eye of the candle before it. So this candle fulfilled two things at the same time. It fulfilled the condition of a bullish candle closing back above our level. It also fulfilled the condition of the bullish candle closing above the eye of the candle before it. So this candle before it becomes our entry zone. Okay, so this candle before it becomes our entry zone. I'll just mark it out. So now that is our entry zone, what do we expect? We expect to take a buy trade when price returns to that level. So let's see what played out. Price has not returned to the level. Okay, so price returned to the level around here. As you can see, if you want to go for one-to-one quickly, you're out of the trade with profits. If you want to go for one-to-one, okay, so let's just see how it went. You can see price even pushed higher from there. All right, so if you are getting any value from this video already, please subscribe to the channel. That's the only way you can encourage me to keep giving you this kind of stuff for free. Okay, so I think that explains that second example. I have a third example for you. Okay, so let me delete this blue line so it does not confuse us. Why is it not deleting? Okay, so we have our relative equal lows right here. Remember, they will be relatively equal. Looking at it, you see that they are almost equal, but definitely it won't be perfectly equal. So the extra part that gives you that extra low, okay, is where you place your horizontal line, which is where what I call the lowest points for your relative equal lows. So it has to be right here. Okay, so I've placed an horizontal line there. So what's our next step? I need a bearish candle to close below this level and a bullish candle to close above this level, okay, to fulfill the second criteria. As you can see right here, this bearish candle closed below the level, so I need a bullish candle to close above the level. So what do we have right there? You can see that this this bullish candle closed above the level. Do you see it? So it's closed above the level, but that bullish candle did not fulfill the criteria of closing above the candle before it, just like the previous example. The previous example, just a single candle fulfilled two of our criteria, okay, but in this case this bullish candle only fulfilled one criteria, which is to close above the level. But if you check very well, you would see that it did not close above the eye of this candle. Okay, so we have to wait for another candle to close above the eye so we can get that that third criteria. So this bullish candle did what? It closed above the eye of this candle, so this candle becomes our entry zone. So I'm going to mark it out as our zone. I'll mark out the low and the high. So that's our zone, and this is the high right here. Okay, so I have the low and the high of that candle. I'll simply wait for price to come back to this level, and I'll take my buy trade. You can go for 1-to-1, you can go for 1-to-2. It all depends. You can do, once it gets to 1-to-1, you can take 50% of your profits off, then move stop loss to break even and ride it as far as it can possibly go. It all depends on your own trade management. Okay, so what do we see playing out right here? Price came back into that zone. Right here and started giving us upwards movements. Definitely your stop loss will be a few pips below the zone, so you can see what you got. This would have given us up to 1 to 3, more than 1 to 3. Okay, so basically that's how this system works. It's a very, very nice system. You can just do your research. I still have more examples. I'm already getting tired, you know. I believe you have gotten the idea, but let me just take this example also. So this is an example for a sell trade because I can see some relative equal highs. Okay, so relative equal high spotted at the top. I need an horizontal line. I'll place it at the highest point of that. Okay, so I'll be a little bit fast with my explanation because I believe you already know what to do. So I need a candle to close above and below that. While we were waiting for that to happen, another relative equal high played out. So instead of just sitting around and waiting for the other one to play out, you can start setting your traps on this one. So place an horizontal line at the highest level of that. I'm waiting for the same thing to happen, a bullish candle, a candle to close above it and a candle to close back below it. So I have that scenario playing out right here. This bullish candle close above it, this bearish candle close back below it. Okay, so next thing I need, the third criteria, I need a bearish candle to close below the low of the candle by its side. So let's see if that is going to play out. Price went up again. I'm waiting for a bearish candle to close below the low of the candle before it, and I can see something here. Let me move it a bit so you can see. What do you notice right here? You would notice that this bearish candle closed below the low of this bullish candle. So it means that this bullish candle becomes my what? This bullish candle becomes my zone. Okay, so I'll mark out that zone. Mark it out like this. Okay. So I'm trying to mark out the high of the zone. High of the zone marked out. Let me get the low of the zone. Low of the zone marked out. And what do you see happening? Price came back in there immediately with the next candle. Price pushed into that zone, activated our sell trade, and this would have given us about 1 to 2 risk to reward ratio. Okay, so basically that's just how the system works. If you have any question, you can ask in the comment section. If you need mentorship from me, you can reach out to me in the comment section. I'll leave a link through which you can reach me. If you are a new viewer and you enjoyed this particular video, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.